This is not spending. It is BlackRock, the of invisible. There is a company managing more money than any government on Earth can spend. And most people funding it have never once heard its name. BlackRock's 2025 annual filing, a dry SEC document most skip, quietly discloses $14 trillion in assets under management. $14 trillion. That number dwarfs the entire economic output of Japan, Germany, and the UK combined. It is not a bank. It is not a government. And here is the quietly unsettling part. If you hold an index fund, a pension, or a 401k, you are almost certainly one of its investors. You fund it. Someone on Reddit posted 3 words that stopped the scroll. What actually is BlackRock? Not rhetorical, a genuine question, asked by millions, typed by one. The post landed in r/no stupid questions. And this confusion? It's enormous. Here's what makes that question so striking. BlackRock moves trillions through your pension, your index fund, your mortgage market. And most people can't name it. That gap between how much something shapes your financial life and how little vocabulary you have for it. That gap has a name. Here's a question most people can't answer. Where exactly does your 401k money sit right now? Not the app, the actual institution holding it. Reddit users asking, what actually is BlackRock, were stunned to learn. The vast majority of its $10 trillion AUM is other people's retirement savings. Quietly pooled, quietly managed. And yet most people feel calm about it. Not informed, calm. That distinction matters more than any fund performance number ever could. That calm isn't confidence, it's delegation comfort. The bias where handing off a decision feels like resolving it when the decision was never actually made. In 1999, the same year BlackRock went public, they quietly launched something called Aladdin. Not a product. Most people hear risk platform and picture a dashboard. Aladdin is something far deeper. A living model of how portfolios behave under stress, running simulations most firms never even attempt. As Business Insider reported in 2021, Aladdin grew into a platform used by pension funds, insurers, and sovereign wealth funds. Institutions managing trillions in assets they trusted to one shared nervous system. That is the quiet genius of Aladdin. It did not sell returns. It sold certainty, the feeling that risk was understood. Business Insider reported in 2021 that Aladdin had grown from 24,000 users to over 82,000 in just 5 years, nearly quadrupling its reach across global institutions. Those 82,000 users sit inside roughly 950 client firms, pension funds, insurers, sovereign wealth managers, each running their risk through the same quiet engine. Your pension didn't choose Aladdin. Your index fund didn't vote on it. Yet both almost certainly run on its models, invisibly, automatically, without your awareness. The platform institutions trust most runs quietly beneath the surface, not because it hides, but because that is exactly where infrastructure lives, unseen and everywhere. Your brain doesn't track every electron powering your fridge. You just flip the switch. That's not ignorance. That's cognitive offloading. Aladdin works the same way. BlackRock's SEC filing documents tens of thousands of employees behind that system. Institutional weight so massive, the mind registers it as infrastructure, not a choice. And here's the cognitive mechanic. Once your brain classifies something as infrastructure, it stops generating worry signals. No alerts, no second guessing. That's not laziness. It's how trust infrastructure works inside the mind. You're not disengaged. BlackRock's LifePath Index 2030 exists for one reason: to eliminate the moment where you freeze, stare at fund options, and pick nothing. One ticker, one target date. The entire allocation decision, stocks, bonds, the glide path, removed from your hands before you ever open the account. Behavioral economists call this choice architecture. The product isn't designed to outperform. It's designed to prevent the paralysis that keeps people out of the market entirely. The recurring decision was never really about funds. It was about whether your brain would show up to make it. LifePath just quietly removed that requirement. A Redditor posted a simple question on r/Fidelity Investments. What are the actual LifePath index returns? They weren't asking for strategy. They wanted a number. Someone answered, 6.19% annualized so far, then added a warning against market timing. But notice what happened. The warning got ignored. The number is what stuck. Psychologists call this anchoring bias. The brain latches on to the first concrete figure it sees and filters everything else through that lens. The strategy disappears. The thread wasn't really about returns. It was about the need for certainty in a system that doesn't offer any. But here's where it gets interesting. If LifePath is just stocks and bonds on a timer, why do millions of smart people hand it over without a second thought? The answer isn't financial literacy. It isn't laziness either. Psychologists call it decision fatigue avoidance. Your brain protecting its most finite resource, the capacity to choose. Every rebalancing decision you don't make, every allocation you don't reconsider, that's not negligence. BlackRock's LifePath Retirement Fund 5-year trailing data shows millions parked here. Not because they ran the numbers, but because not running them felt like the only sustainable choice. BlackRock publishes every number, right there on the fund page. A 5-year maximum loss of negative 21.68%. The data is not hidden. It never was. So why don't participants look? Because looking isn't neutral. The moment you see that number, you have to hold the original decision again. And that feels like risk. Behavioral economists call this ostrich effect, the documented tendency to avoid information that might force a painful reevaluation of a choice already made. The fund didn't hide the loss. Your brain did. That's not a character flaw. It's a very efficient circuit. Now you have a name for it. There's a documented pattern in behavioral economics. When checking an account feels worse than not checking, the brain simply stops checking. It's not laziness. It's not denial. The brain is running a cost-benefit calculation. And right now, the anticipated anxiety outweighs the anticipated benefit of knowing. BlackRock's AUM climbed from roughly $9 trillion in 2021 to over $11 trillion by 2025. Yet retail participation in passive products lagged. The product didn't need to fight the avoidance. It was quietly shaped to sit beside it. No login urgency, no loss alerts. Then in April 2024, BlackRock launched LifePath Paycheck, and the financial world paused. Not another fund. As CNBC reported in April 2024, LifePath Paycheck evolves the target date fund, layering in guaranteed income so retirees receive predictable deposits month after month for life. The design is deliberate. It mimics the pension paycheck Americans lost 3 decades ago, the one that made retirement feel safe without requiring a finance degree to manage. That's the wiring LifePath targets. Not greed, not laziness, but the deep cognitive need for a recurring decision you never have to make again. BlackRock didn't pitch LifePath Paycheck as a higher return. They pitched it as a feeling. The quiet certainty of a check arriving on the first of the month. CNBC quoted the rationale directly. The feature gives legacy employees comfort they have from the legacy pension plan. Not yield, not alpha, comfort. That word, comfort is doing enormous work. The 1980s pension didn't just pay out, it removed a decision. The product isn't selling returns, it's selling the absence of a recurring decision. And that's exactly the thing your brain has been craving since the pension disappeared. BlackRock's Aladdin platform doesn't just manage risk, it manages the cognitive load of deciding. Institutions stop deliberating. The system decides for them. As Business Insider reported, Aladdin monitors trillions in assets for pension funds, insurers, sovereign funds, clients who never want to second-guess a position again. LifePath removes the rebalancing decision. Paycheck removes the withdrawal decision. Each layer peels away one more moment where a human might hesitate or panic. BlackRock isn't selling returns. It's selling the relief of not having to decide again. That's the product. That's always been the product. You never chose the fund your retirement money went into. It was already chosen. Before you filled out a single form, before you asked a single question. Choice architecture is the term behavioral economists use for this. The invisible design of how options are presented, and which one wins when you do nothing. Target date funds became the standard 401k default across major plans, as reported by CNBC in 2024. Millions enrolled without ever actively selecting them. The most powerful nudge isn't a button you pressed. It's a button you never saw. Because the architect of your choice set the default long before you arrived. A Bogleheads thread spotted something quiet inside BlackRock's LifePath paycheck funds. An annuity option. Embedded. Available. But never pushed. The structure gives participants the option to purchase fixed individual retirement annuities. Option. Not a default. Not a recommendation. Just quietly available. That word, embedded, is doing enormous work. The annuity isn't absent. It isn't hidden. It's just never the path of least resistance inside the fund design. Your brain reads option and files it under freedom. But choice architecture research shows when something requires action to find, most people never find it, by design or by default. Here's the resolution you've been waiting for. Trust in finance isn't built through transparency. It's built through absence of friction. You trust what you never have to think about. That's not loyalty. That's cognitive offloading. Your brain files it under handled. BlackRock's SEC filings show over $14 trillion in assets under management. And most people heard that number just now for the first time. Keep the list visible. That's the wiring. Not manipulation, not secrecy. Just the brain's rule. Whatever doesn't demand a decision gets trusted by default. Keep the list visible. It was never about the math. BlackRock employs thousands of analysts, and still the average investor freezes not from ignorance, but from exhaustion. Psychologists call it cognitive load. Every open decision you carry is a background process draining the same finite mental battery you need for everything else in your life. Delegation isn't surrender, it's a deliberate trade. You offload the fund selection so your mental energy flows toward the parts of your life that don't have a benchmark index. The real insight? The question was never, can I learn this? It was always, what does holding this decision cost me? Every single day I keep it open. Here's the part nobody says out loud. The same wiring that stops you from panic selling also stops you from ever opening the statement. Comfort and complacency wear the same uniform. A decade passes, contribution rate unchanged, fund fees unread, allocation untouched. Invisible isn't safe. The BlackRock LifePath Index 2030 fund carries a one-year information ratio that most holders have never once looked up, not because they don't care, but because the account never screamed. The wiring that keeps you calm in a crash is the same wiring that lets 10 years vanish without a single review. Here's the reframe. BlackRock isn't the villain. It isn't the hero either. It's the mirror. And what you see in it is your own wiring. From 9 trillion to over 11 trillion in 4 years, per SEC filings. That scale doesn't make your brain think clearly. That reaction, awe, suspicion, rage, surrender, that's the cognitive load of encountering something your brain was never built to process at this scale. The product was never BlackRock. The product was the question you just asked yourself about it. Because now you have a name for that reaction. That's the wiring. Here are 3 questions. Not a quiz, just a mirror. When did you last actually open your retirement statement and read past the balance? Second question. Do you know which target date year you're actually enrolled in? 2030, 2040, 2050? Most people guess. The year sets your entire glide path. Third, can you name a single fund inside the wrapper? BlackRock's Life Path series, documented by Business Insider, tracks near passively to a benchmark. You own it, but could you name it? The answers don't reveal your wallet. They reveal your wiring. Not knowing isn't laziness. It's what happens when trust replaces attention. Now you have a name for that. The financial industry didn't create your avoidance. It just found it. Decades of behavioral research handed them a map, and they built a product around every exit. Pension paychecks disappeared, and with them, the one financial decision you never had to make. That recurring deposit handled everything. BlackRock noticed. In 2024, they launched Life Path Paycheck, framed not as an investment, but as a pension replacement. The word paycheck did the psychological work. A trillion-dollar industry didn't manufacture your avoidance. It just recognized it before you did. That's worth sitting with. Not guilt, just recognition. Herbert Simon called it bounded rationality. We don't optimize, we satisfice. We pick good enough because chasing perfect costs more than it returns. That same wiring, every investor saying, just put it somewhere reasonable, pooled into one firm. BlackRock now manages roughly $14 trillion in assets. Nobody chose BlackRock because they ran the numbers. They chose it because choosing was expensive. Mentally, emotionally, cognitively. So here's the real diagnostic. Your portfolio isn't shaped by laziness. It's shaped by a cost-benefit calculation your brain ran silently, long before you opened any account. BlackRock's Aladdin maps every asset, liability, debt, derivative. Millions of decisions, pre-resolved. The portfolio never had to think twice. That was the whole point. The wealth was never managed in a tower. It was managed in the moment someone decided, once, to stop deciding every single time. That's the cognitive structure Aladdin mimics at scale. Remove the recurring choice, and the behavior follows automatically. The target was never your portfolio. It was the absence of a recurring decision. You weren't missing willpower. You were missing a system that made willpower unnecessary. If this changed how you see money, subscribe for more wealth psychology stories.